Hi guys, so weekly outlook today, Monday, 8th of November, December, October, whatever, December, 2 days after Nitro Claus or Nikolaus, as we call him in Germany, and a couple of days before the Federal Reserve. And that's the most important, most interesting interest rate decision likely, which is due on Wednesday evening this week. It's the week of interest rate decisions, and let's start with the important ones this week. Tomorrow, on Tuesday, 9th of December, we got the RBA, the Royal Bank of Australia. It's not expected that they are going to cut interest rates, which is bringing us straight to the point. The Australian dollar might actually be due to strengthen further. The risk sentiment remains positive, stock markets moving higher, and that's what could push the Australian dollar even towards higher levels. Let's take a look at the chart here right now. Technical resistance level, that's exactly where we are trading at right now. Any retracement might be used to get yourself cheaper into the market, and any breakout here might actually be used to cause the market strengthening further. We have subsequent levels. You can check these ones out here. Roughly, those are the zones we talk about: 67.5, 68, and 69.5 level, which levels which could push the market momentum back to higher levels. That's the weekly chart, and even the monthly chart is kind of quite important and interesting, as the market is about to either it broke already higher, that's according to the recent technical resistance levels, or the market is about to break kind of higher at this level, or even not, because the 50 moving average might act as a resistance area. So stay focused and stay tuned for further updates here in this market, which we will examine medium term. If the rate cut is not happening in Australia, as it's going to be expected currently, the Aussie might gear up some momentum and pushing its value to higher levels. The Australian dollar might actually kind of start to appreciate somehow and pushing itself towards the upside. In Canada, we have another interest rate decision, and that one is due on Wednesday, similarly to what the Federal Reserve from the US is giving us. Wednesday's interest rate decision not expected to reveal any difference. The Canadian dollar, hence gearing up some steam. Vice versa, yet in a different mentality, as a pattern in the charts are kind of opposite value. The dollar against the Canadian dollar, the counter currency in this case, the base currency on the other pairs, the Aussie US dollar, obviously causing the Aussie to rise, subsequently the Aussie US dollar currency pair to move higher, and here the counter currency, the Canadian dollar, where the dollar Canadian dollar currency pair had geared up some momentum fairly recently. Last week, the market broke back below this 50 moving average, the market weakening. We see also that this was a total turnaround, a nice turnaround area here, and the market is maybe expected to break through this 50 moving average, and if that's going to happen, the market might weaken quite a fair bit. The Canadian dollar's competitive advantage can actually be seen against the US dollar, the greenback, and against the euro. We can also see the same story. So you might be kind of interested in taking a look into this currency pair, as we might have found a strategic technical resistance level in this market, causing the euro CAD to weaken subsequently. Here, market motivation, lower price patterns might be the outcome here at some point. So downside motivation in the euro against the Canadian dollar, it could be what is going to happen here in the euro against the Canadian dollar anytime soon. So that's the two interesting currency market motivational moves we see, plus the Swiss National Bank as strategically happening in the past. We don't expect any major change here. So the Swiss franc might remain slightly volatile, however, might not cause any further weakness here or strength in this market as we speak, or in the market as we said in general. What else is up and running? And that's coming obviously from the Federal Reserve on Wednesday. The Fed is expected to cut rates down from 4 towards 3.75%. That is potentially at least helping the market motivation to weaken further. The federal funds rate might be adjusted, which is the expectation, and that subsequently could cause several strong market moves. The US dollar is going to weaken. The euro is expected to strengthen. We saw recently that the dollar CAD, just now we checked it out, the dollar CAD weakening on the back of further weakness of the US dollar. If we're looking at the euro dollar currency pair, we see the same which is happening at the moment. The market also broke higher. So maybe there's another array. And previously, I have to correct myself. In fairly recent couple of weeks, I said I expected the US dollar to strengthen, which would obviously cause the euro US dollar currency pair to weaken. Now, I might say the market might actually strengthen further, and I might see I do see the euro gearing up momentum. Euro higher, pound maybe higher, among other currency pairs. And that's what we can currently see, right? So the euro is about to break towards higher levels. Whether this market is celebrating the 117.70 area as a technical resistance area remains to be seen. But for you guys who are either members or looking to get further insights into the FX market and related trades, check out our website, fxstrategies.asia, where we give you day in, day out webinars, videos, as well as obviously our chat group to check out markets. So that's the euro dollar currency pair. Shorter term wise, we also can see and check out the pound, because the pound is also similarly moving nicely higher. This technical pin bar needs to break. So we need to see the market breaking above this 133.50 area. If that area breaks, the market might strengthen. If the market does not break, and there we go, and we like these areas to trade, right? Either you place a sell stop or you place a buy stop, or basically actually both, and you expect the market to break out. What happens often in such markets is that after a sideways trading zone, and that's exactly the zone we can see in the 4-hour chart in the recent couple of trading days, say last week, end of last week towards this week now, if the market breaks away to the up or to the downside, as said, we might see an explosion in market volatility, whereby we talked about the same story here in the Aussie. If the Aussie breaks higher, which it currently looks like, the Aussie might strengthen. Plus, we might see the pound to rather slightly weaken, right? So pound weaker looks exactly how it might happen. And guys, that's bringing us straight to our currency pair, which we've traded. We sold the pound Australian dollars currency pair. Why did we do? Because we see that the market broke the resistance area, briefly retraced again. So beautiful pin bar candlestick pattern tells us that the market might be on track to break lower again. If this area, this support zone at 2,000 will break, the market might kind of escalate its downside motivation. And by the way, not only the daily, not only the 4-hour, but also the weekly chart tells us that further sliding prices might occur. So quite a bit of downside motivation might be on the cards, which similarly we can observe here at and with this currency pair here on the monthly chart. Retracement, market higher, right? So market higher looking to weaken. Last week, the market higher, the market higher, weaken again. If now this zone breaks, the mentioned 2,000 level, the market might weaken further and giving us some interesting advantage. That said, the Aussie's strength might actually escalate even further towards the end of the year. What we have is currently the year-end rally. Equities moving higher, but also crypto markets keep moving towards higher levels. And let's examine quickly how that could be ongoing. The Bitcoin market found some support and is currently rising slightly. Bitcoin positive. This might also pull other markets to the upside. We mentioned this beforehand, right? Ethereum looking settled for higher levels. The 50 moving average as a strong support area might cause the market to strengthen, pushing the momentum to the upside. XRP is lagging behind slightly, looking good, but not as good anymore at the moment. We will wait for further entry opportunities potentially, whereby Cardano is being so low that this might also kind of be something interesting. I wouldn't now buy it, but I'm still in it. The position is deep in the shits, to be honest, but we will enter again and buy the market again if it goes lower. However, the current levels look kind of quite interesting, and it might be enough to see the crypto space moving to the upside. Guys, so focus on the news events. Tomorrow, RBA, no change expected, but on Wednesday, the Bank of Canada plus the Federal Reserve might gear us the way into the next year. Rate cuts are expected to help us. Basically, rate cuts from the US will obviously cause the dollar to weaken, will obviously cause the ongoing Christmas rally to give us a nicer view over markets. And stay tuned, guys. See you then. Take care, everyone. Ciao, ciao.